Hello to all my friends and family, and welcome to Jim's 5am Club. I'm just down here at Circular Quay, and because it's blowing a bit of a breeze at the moment and there's quite a few people about on this beautiful Friday, I thought I'd come over here to wharf number 6 and just get myself out of the elements and at the same time be able to talk freely without having people listening in to what we're talking about or annoying them on their lunch break. So as you can see over there on the lawn adjacent to the Museum of Contemporary Art, there's a gin festival happening at the moment, which will close at 9 o'clock this evening, and I think it's going over a couple of days, so tonight and tomorrow. And it's a beautifully set out area with a number of stalls with flags where you can go and actually taste different types of gins from all the different gin distillers here in Australia. And you can have some cocktails and you can buy some alcohol as well, I think. But it's a wonderful way to pass an afternoon or an early evening leading into this weekend. And it's a great time of year, not too hot, not too cold. I must admit the cloud has just blown over now, but earlier this morning the sky was a brilliant sapphire blue. It was glorious. But what are we going to talk about today? I was going to do a book summary, but I've just realised that I've left my notes in my jacket. So I'm going to do something a little bit different today. I'm going to talk about investing, share investing, and just share some experiences and some lessons that I've learned over the past decade, where I've had the same share broker. We've got a very good relationship together, and he teaches me things along the way, and it enhances our relationship, and it makes opportunities pop out of nowhere on occasions. My broker is a full service fee broker, so I pay a fee for him to buy my shares and sell my shares. And incidentally, I'm a trader. I buy and sell shares, sometimes on a daily basis, depending on what's happening. But I just want to talk about a trade that I did just recently so that you understand the benefits of having a full fee broker or a premium broker, because the cost of the brokerage is the last thing you need to consider. This broker that I've got at the moment and that I've had for 10 years and I'll have for as long as he remains a broker, told me about a month ago that his organisation, the organisation that he represents, are managing a float of a company, and a float is basically a company which is being listed on the Australian Stock Exchange. And the company that was being floated is an Australian company named Airtasker. And a lot of people will probably have heard of Airtasker because they've got some really cool ads, and they provide services to homes and residential sort of people, where they organise labour hire or people to come in and do tasks for you. So this organisation decided, in order to grow and become a global player and to take on bigger markets, needed some capital to fund its expansion plans, and it approached the stockbroking firm that my broker works for. So they managed the float. So my broker said we've got a float coming up, and I think it'll be a good one to get involved with. And he had a certain allocation of shares to be able to provide his loyal clients, the clients that he's dealt with, for a number of years, and there was a limit. There was an upper limit in terms of how many shares each client was able to procure to make it fair, so that everybody got a fair share of these shares. And the price of the share was 65 cents, and it was supposed to launch on Monday. So the launch date was Monday, where it officially gets launched or got launched on the stock exchange. And when it gets launched, then it's in the open market and people can bid for those shares. So the shares were purchased in a package at 65 cents each, and it was a fixed price for everybody, in order for the organisation to raise the necessary amount of capital. So the first thing to understand about a share float or an IPO is that there are institutions buying shares, there are mums and dads buying shares, and there is a limited number of shares that are made available. And in some share floats, not all the shares that are made available are taken up in the share offer, and in other share floats they are oversubscribed. And oversubscribed means more people put their hand up to get an allocation of shares than the number of shares that were made available. So for this particular float that my broker had available and was able to provide me with an allocation, it was oversubscribed by a level of 4 to 1. So there were 4 times the people asking for shares in terms of the volume than the shares that were available to be allocated. And this is good news, because when you have a IPO which is oversubscribed, it means that there is a high demand for a limited supply, which generally sort of indicates that share price on debut may have a positive price action. It may list, gets bought and sold for on the stock exchange, may be higher than the 65 cents that we bought the shares for. So instead of listing on Monday because of a technical glitch, the shares listed on Tuesday. And to my surprise, I spoke to my broker in the morning before they opened up, and he said that in the initial sort of market, the prices were matching at a much higher rate, at $2 or $1.50 or $1, so something well in excess of the 65 cents that I'd paid per share for my parcel. But as we got closer and closer to the 11 o'clock debut, the prices kept on coming down. But the shares listed, and it was a very, very good debut, and the shares basically got as high as 105. So they closed at 105 on the day, which meant a 40-cent premium, which is a huge premium, because what Tim was saying was that he thought that maybe the shares would get to maybe 85 cents, maybe $1 if it was really a high demand. But they got to that $1. But Tim told me something else which is very, very important to understand, and it's the rule of threes. And he says what normally happens is when shares go up, they normally go up over a 3-day period, and when bad news comes out, the selling or the sell-off normally happens over a 3-day period as well. So the first day the shares dip, The second day they dip again, and the third day they dip even more. So we've learnt that over time, so that we're aware of what the possibility may be in terms of bad news coming out, and whether or not we needed to bunker down, and for how long and how deep we needed to bunker down. So we said that we'd go another day, given that we understand that rule of three. And on the second day, the shares had a spectacular price movement for the day, and they got as high as $1.95. Remembering that we bought them for 65 cents, they got to $1.95, and then they closed at $1.75, which is a phenomenal performance. A lot of money to be made on that sort of price performance, and it's unprecedented. I don't think I've seen any other share float or IPO have a similar sort of result. So once the market closed, I had a chat with my broker, and I said, what do we do? The big question is, what do you do? After you've had a couple of massive up days, you need to try and figure out an action plan of what do you do. Like, do you hold them? Do they go to $5? Or do you sell them because they're over purchased and overbought? So we decided to go one more day. Tim said, look, let's just go one more day and see what's happening. So on the third day, they opened up and quickly shot to $1.90, which indicated that they may hit $2 or more. So it was looking like it was going to be a massive third day. But I got a call from my broker, and he said, I think it's time to sell, because they got to $1.90. They didn't get to that $1.95 that they got to the day before, and then they backed off. They started backing off quickly. So we sold them at $1.74, and believe it or not, at the end of yesterday, at the end of the third day, they closed at $1.30. So the fact that we sold them at $1.75 is a very good result. So once again, there is a big lesson there, when to buy, when to hold, and when to sell. And it's almost impossible. It's almost impossible to get it right. But what we've done is we've learnt over time not to be greedy, and to try and cash in and make a profit while we can, because everybody's probably thinking about the same thing. They're all sitting on some huge windfall gains. Some people are more greedy than others. And so the next conversation I had with my broker is, what price do we try and wait for so that we can get back in and trade them again? So we're currently looking to see if the price can dip a little bit more, try and dip down to $1.20 or $1.10, and what we'll do is we'll buy all those shares back again and hopefully see or expect a pop-up to $1.50 or $1.60, and then sell them off again and make a double whammy sort of gain out of a share trade over, say, a week or two. So I just wanted to share that with you because it's interesting information. A lot of people aren't aware of how the share market operates and how you can make some very good money very quickly, but you can also lose a lot of money very quickly, especially if you're a trader. But my broker suggested to me that the reason why these shares have taken off so much is that you've got the day traders, the Reddit day traders, who have been trading the gaming stocks in the US. They're the ones who have been pushing these shares to astronomical highs here in Australia, because at the end of the day, Airtasker is one of those cool sort of companies that a youngish sort of investor would love to be part of, and it suits that their genre, I guess, is one way of explaining it. So we'll just keep tuned, we'll just see what we're doing and try and move the money in and out and around if possible. But once again, I thought I'd take this opportunity just to share with you some investment advice or investment knowledge that you may want to discard or you may want to carry forward and do something with. But it's important in life to build wealth through multiple income sources. You can't just have your job, you just can't have residential investments or commercial investments. You also need to have some money invested in trading or in dividend yields. It all depends, but it's the trading that gets me excited, and it's the trading that allows me to stay up late at night and get up early in the morning. So there you go. So let's finish off the positive affirmation. I'm alive, I'm well, and I feel absolutely great. Even better today than what I felt at the beginning of the week. To my friends and family, stay connected, stay reasonable, stay relevant, stay greedy and stay ungreedy at the same time. So learn when to hold, when to close, and when not to gamble or be part of the game at all. So thank you very much, and I look forward to chatting to you again, maybe later on when I go home, and we'll see you later. So thank you, and bye for now from Jim's 5am Club. Yassas, bye.